Life insurance is an important part of financial planning, but certain types of life insurance offer more than just death benefits. Back with us is financial advisor Ernest Burley from Burley Insurance and Financial Services. So please tell me, what exactly is universal life insurance?
Well, universal life, also called a UL or IUL, that's a variant of universal life, index universal life, is a very flexible life insurance policy that gives you the opportunity to create a permanent plan of life insurance that you won't outlive. And also you can build a potential cash value in the policies too.
Okay, seems complicated. So let's break it down question by question. So what makes that plan flexible?
Well, it allows you to decide to pay more premium if you want to. Most policies you can't pay more, you pay what the premium is, so you can pay more into the policy. After a certain period of time, you can stop paying the premiums, or you can pay less premiums and the policy will just feed off of that until it expires. So it's very flexible in that regard, regarding the payment and other options too.
Okay, so some plans are written to provide protection for life, correct?
Mm-hmm.
What do they mean by that?
That means you won't outlive the coverage. So you can write it to age 110, 120, 105. So you don't outlive your protection, which that defeats the purpose if you do that. So that's what it means by permanent protection. It's in place for the whole life of the insured person.
Okay, so if that's the case, how could it be possible that some policies could leave someone without insurance later in life?
That's a good question. I come across that all the time. I've addressed it a couple times this week already. So these policies, if they're not written properly, can actually shortchange a person because they have guaranteed columns and they have non-guaranteed columns. And some people get confused with the shiny object of the non-guaranteed columns. But the guaranteed column says exactly how long that company is saying they're going to guarantee that policy will be in place. And some people get focused on the other side and it's not written properly and they end up like shortchanged later on down the line. So it's not good.
So they need to just make sure they're reading the fine print to make sure to see how long they're going to be covered.
Yeah, look at the illustration. So the illustration shows how long that policy is going to be enforced, but no one ever does it. Or they look at the non-guaranteed side. Look at the guaranteed side that shows that's how long the policy will be enforced, not the non-guaranteed side.
Okay, got it.
Yep.
So what do you mean by, the universal life policy gains cash value? How does it do that?
Mainly in two different ways. One, they have a guaranteed column, right, that has a fixed rate, 2 or 3% or what have you, that it says we guarantee we'll put this amount of cash or give you this interest credit to the policy. And then they have non-guaranteed columns that are normally linked to some index, like a large cap index, a tech index, a small cap index. It's not guaranteed, but if those perform well, then you'll have a bigger cash value. But you don't want to focus on that side. Focus on the guarantee, not the non-guarantee.
Okay, we're really drilling it in.
Yes.
Guarantee.
Yes.
So when I'm looking for a universal life policy, what are some things that I should be looking for in that guarantee column?
Well, you want to look at, what do you want the policy to do for you? If you have a budget, look at your budget. And how long do you want the policy to be enforced? Those are like some key things you want to take a look at when looking at these type of policies.
Okay. And what kind of person is a good candidate for universal life policies?
Well, a person who wants a permanent life insurance policy where the premium is not going to change, it's going to stay the same indefinitely throughout the policy period. A person that's not concerned with cash value. And also a person who wants the least costly option to get a permanent life insurance policy. That's like the key thing. Stable premium with a low cost, not changing over time, no cash value, and they want like the lowest premium possible. Yeah.
Mm-hmm. But doesn't term life have the lowest premium? So why shouldn't we be doing term life policies?
Another good question. But term is eventually going to leave you without coverage later on in life. So if you want permanent life insurance, if you want term is not the way to go.
Okay. So, but what are some cases where somebody might not want whole life insurance and they would want to go with a different type of policy?
Right. If you want permanent life insurance, whole life is an option, but it normally costs a little bit more. So the reason it costs more is because it has a bigger cash value feature in it. So if you're cost conscious, then you get the index universal life or guaranteed universal life policy. But if you're like, okay, 20, 30, 40 bucks a month more for a bigger cash value is not a big deal, then whole life is the option. So it's different strokes for different folks. Do what best suits you.
Okay, I'll definitely keep all that advice in mind. Thank
Sounds
you
good.
very much.
Sounds good.
So, individuals should always contact their own financial professional and attorneys to help answer questions about specific situations or needs before taking any action based on this information.